Good evening and welcome to Tuesday Meet session. Tuesday Meets are audio meets. Today's topic of discussion is the geopolitical uncertainty and market. So without ado, I would like to invite Dr. Ram sir to take the session forward. Over to you, sir.
Thank you very much. Uh, am I audible? Right in the chat box. And this meeting is streamed on the YouTube as well. So whoever is participating on YouTube, you write in the comment about volume. All right. uh, those who are joined first time, please write your city in the comment. All right. Uh, today's topic of discussion is geopolitics and the market, because when we track market or invest or come across social media posts, uh, we see often the various news affecting news, especially from the foreign countries, affect the market. Why should uh, war or any news like interest rate of USA should impact the stock market? So geopolitics, that means geo means word politics. Now, what is politics? By definition, politics is pulling others down. Countries try to pull each other down. Political parties do the same thing. People in the office do the same thing. Friends do the same thing. Pulling others down is nothing but the politics. Okay. Now this geopolitics impact market. Uh, I always say that whatever the market price, current market price has four component: W, X, Y, Z. So for anything, we know that there are three coordinates X, Y, Z. So here price of index or stocks has four different determinants. First is world news. That is geopolitical. That is what we will discuss. Then X is national uh, macroeconomics news. What is macroeconomics? Macroeconomics is the aggregate economical indicator. For example, GDP, GDP growth rate, inflation rate, interest rate, unemployment, exchange rate. These are the macroeconomics indicators. They represent aggregate level activity of all businesses in India. Y means sector related information. There are various sectors in the business. For example, healthcare sector, hospitals, bank, information technology, telecommunication, property development. There are almost 100 to 150 different industries and approximately 20 different sectors. So any information which will impact the sector will also influence the stock price. For example, AI, artificial intelligence. The news of AI is impacting the IT sector. That means all companies will be under pressure. And last is company specific information. If you want to give the weightage to each component, I will give you 25% for each. That means uh, if any company's stock price moves, this will be the factors, information. There will be other factors like liquidity or sentiments, but let's keep focus on the information related price movement. So world news, the national level news, sector specific news, company specific news. Arbitrarily, just for remembering, I give equal weightage to all the things. So why should Trump tweets? Now, please be aware that this is not a meeting is not about politics. It is about impact of politics on financial market. So I'm not going to criticize Trump for his psychotic behavior, which everyone is aware. We'll discuss how this information of geopolitical impact. Can you write in the comments which is price sensitive information from the geopolitical perspective? When I talk about geopolitical information from abroad, first is war. Any war, especially if it is impacting the major countries, it will affect the global economy, because now we are not isolated economy here. Entire global has become a village, and we are integrated with each and every country. If tomorrow something happens in the Mexico, there will be some impact on the India as well. If there is something in Japan, there will be impact in Indian economy, some sort of other. Second is economical news. Uh, People get confused between economical and financial. Economical means the production of goods and services. Financial means related to the money, which is debt, equity, derivative, that is financial market. Economical information is about goods and services, how much goods, quantity, quality, and price, demand, and so on. Then interest rate of USA. It is also called as Fed interest rate. The way we have the RBI and it has repo rate. Similarly, there is a Fed, which you can consider Fed as a central bank, which decide the interest rate in the USA. So that interest rate, Fed rate, will also impact on the Indian market. Next is dollar to rupee. Okay. Usually it is written like when in terms of India, we talk this ratio. Let's say if it is 95 rupees, what does means for $1 we'll have to give 95 rupees. Okay, so this is a base currency, $1, and what is fluctuating is a numerator. So if you see this type of symbol, base currency remains 1 and the numerator changes. It means 95 rupees, 96 rupees for $1. It affects the Indian market. How? It is a complicated. I'll try to explain how it affects. Suppose there is FII, foreign institutional investor. They want to invest in a globally, and they are seeking the interest. They are seeking the return. Okay. Now, when US FIIs invest into India, first they convert to the rupees to invest, and then when take away the money, the rupee has to be converted to dollar. That means when they measure return in terms of dollar, it will be different from what we are getting in India. For example, in 2008, how much was the dollar? You can tell, maybe take 45 rupees or 40 for easily calculation. And 2026, dollar is 95. Let's say 95. And some FII invested 100 rupees in 2008, and now it has become, let's say, 300. So apparently here, his return is, in terms of rupee, his return will be, how much will be the return? 200 rupees is the gain. So it is, we calculate by last price minus first price. So gain is 200 rupees. And initial was 100. So they have gained 200%. Okay. I'm just taking simple, not taking the CAGR as well, because then things will be get complicated. Okay. If you want to take the return, second price divided by first price minus 1. %200. Here, when we do the adjustment, we'll take the how much has the depreciated. Okay, so let's take the first price minus second price minus 1 into 100. Okay, so 57% depreciated. So if you take the calculation of this, if you adjust, their FI's return will be lesser than the what Indians are getting. Okay, I'll just show in a easy format how to calculate dollar adjusted return. Okay, let's take the Control Z. Okay, bracket final value of Nifty multiply by the starting value of the dollar. Okay, divided by starting value of Nifty multiply by this. We'll have to put the and then 1 minus okay. So this is the return they get. Okay. Let's go to the next table. So dollar adjusted return is impact the FI return. Secondly, if interest rate of Fed increases, now they will get more return, that is risk-free return. Why should, if let's say they are getting 5% return, which is risk-free, why should they invest into Indian market, which is even 5 to 6% and with equity risk? So whenever interest rate increases in the Fed or Indian stock market goes down. All this economic related. You might be interested more about war. Okay, so what are the other factors? Other factors are oil. Most of the war happened for either oil, minerals, some sort of uh, resources. Even the colonial war happened for the gold, silver, minerals, oil. So whenever there is a war, there is a underlying resources fight. Okay, you may hear a lot of stories, Saddam Hussein type story, आतंकवाद के खिलाफ, whatever this uh, terrorism. These all things are just a facade to grab the resources in that particular country. Usually, Africa, Asia has a significant amount of resources, and these Fengis countries. Fengis means France, England. I call them Fengis. You can say add one more. France, England, Netherlands, Germany, Italy, Spain, Canada, and uh, America. This Fengis country, Fengiska country, uh, try to uh, do the all the political unrest all over the world. We'll remove the Canada because uh, let it be. They are all still there somewhere, directly or indirectly. Or initially in last century, there were Fengis countries. So let's talk about Fengis countries. These countries are notorious to create proxy war, direct war, indirect war. Uh, so wherever all wars all over the world, there will be involvement of these Fengis countries. Now, how a market reacts to war? Market creates uncertainty. Now, the market or business is not interested which political party is in power. Market is not interested whether it is right wing, left wing, central, up, down. Market is not interested. Market is always interested in stability. Even if it is dictatorship, but it is stability, they are okay, provided that dictator is allowing free market business. For example, China is a dictatorship, but still it is growing because they are pro business. USA grew in last century because there is a lot of stability, at least inside the country. They create uncertainty outside the country, but for them, they have a significant amount of stability. Even in India, if there is a political stability, there is a rapid growth, or we say business growth happens, certainty is there, and eventually market will grow. So now you must be interested more about what is the current scenario. Okay. Or what uh, Trump is doing and what should you do. That is what your interest must be. So let's take a chart of the uh, full chart, and I'll show how geopolitical events unfolds. Okay, let me start this first. By the time you can write your questions in the chat box as well. So we'll discuss chat box means comment box. So we'll discuss those questions as well. Uh, our main focus is how geopolitical scenario affect the stock market. So let's take line chart and we'll take the Nifty 50, that is a index. Okay, so let's start from here. In 2020, there was a dot-com bubble. 2008 housing bubble. Let's go and check the last two events. Last events which happened in the Putin and Trump. So what I call this here, I'll put high to low. So you can write down this information will be useful to check your risk profile of your mutual fund or your portfolio. So this is a Putin drop. Almost 16% drop. Putin correction started in Putin तो पीछे रह गए वो तो ट्रम्प है sorry this is the Putin my mistake so it is also 18%. What I am showing is the impact of war or uncertainty. 18% down. This is in 2022. So let's name this as a Putin impact. Why not Zelensky? You can say that as well, but Putin is more popular, so let's put as Putin. But Trump say, why should I be left behind? So as soon as he came into power, he started tariff and other things. So this is Trump. Now Trump, now you'll see the scenario. First, this is a tariff war. First is a tariff war. And now this is Iran or Iran, as they say. What is a common thing in these three geopolitical scenario? You can see there is a 15 to let's say 18. We can say for simplicity 15 to 20. 15 से 20 तक का करेक्शन हो ही जाता है. This is Iran. What happens in the geopolitical scenario? You may say that why it is market is not correcting 30, 40, 50% in a geopolitical, at least in the last 2-3 decades, because war does not start on the day one. Okay, it is not like Hitler that suddenly he will start attack. So before war, 2-3 months this later start giving some hint. They start giving rumors, start giving threats. In that case, what people do? People unwind their long position. They start booking the profit, and no fresh long position and leverage position are not there when there is a appreciation of the war. So market crash happen when there is a large amount of leverage position. Leverage position means people take loan and buy the shares. It does not happen when in case of war uncertainty. If it is not sudden, okay, if it is sudden and there is a previous rise, then it is possible, but usually it does not happen. 15-20% is a normal correction, normal event. You are interested more, what is the next? Will there be market crash? Answer is no. Why? Because Iran war is known. Trump mindset is now known. There is no fresh information. Every market discount everything. That is a rule of market. That means market anticipate at least 3 year ahead of the present scenario. That means stock market knows what will happen next 2 years. ट्रम्प का पूरा जो कार्यकाल है, market has predicted. On what basis they were predicted? If you see the pattern, he will not allow stock market to go down, but he will not allow stock market to go up as well. So he is a bi-directional player. In fact, if you ask uh, the greatest trader in the last 100 years is the Donald Trump. He's the trader. He's the trader. He's not a president. So he does the all the things. His main business is trading. So his pattern is very simple. If you see the crude oil price chart, this is he started in the February, but he will not allow crude oil to go 120. He will not allow crude oil to go in terms of barrel. This is in amount rupees, but his range is 60 to 120. So if if crude oil start going up, he declares some news that now bombing is stopped. Then crude oil will uh, go down and then again start. According to my estimation, Nifty is not going to go next 3 years. Meanwhile, 23, 29 is also election. So for up to 2029, Trump will be there. So he will not allow our market to go upside as well. So probably we will be in the range of 20,000, 21,000 downside and 27,000 upside for next 2 years. That means this might be a range. So Trump pattern is he is a swing trader. He does buying when price goes down, he sell when price goes up, and he's a swing trader. So there won't be any significant about market crash. What about the how Indian government is responding to the Iran war? Now, the government of India is approaching a very cautious approach. Uh, they are not reacting to the comments of the Trump. People say that we should also comment every to the Trump every day. But our Indian government, from all political parties, it is not only this government policy. We don't react to the or we don't react every day to the news or comments. That is a habit of Fengis countries. India does not react to each and every comment. So that is the policy since several years, several decades. It's not what we are the developing countries, so we don't want to get into the unnecessary social media war because the people who are in a survival mode, they cannot afford दुनियादारी because India is a country of 150 crores. The first task of Modi ji is to feed these people rather than the fighting against political global leaders. So there are many challenges here, and everyone you may come across social media. Why Modi ji is silent on this Iran and one seller is killed by USA, Iran, or Trump put a comment, Narendra is compromised, etc., etc. This all are political rhetoric. Reality is Indian economy is uh, not so good in terms of per capita GDP. We may say that we are the fifth largest economy, but if you check the per capita GDP, we might be 150, 150 or 140. That means from the bottom, we are at the bottom. If you check GDP per capita, this is the trading economics website. It is a free website. You can check the data here, indicators, GDP. Let's go to GDP. here GDP per capita. Yes, yeah, it is there. Let's see this. So this is GDP per capita. And if we go down, we have to search from the bottom. Okay, India is the bottom. If you check for the word, let's find out the where is the India. So this is the India GDP per capita income. Okay, so there are which countries are below us? Nigeria, Ghana, Bangladesh, Mauritius, Kenya, Tajikistan. Which countries are above the India? You can see up. Bhutan, Iraq, Namibia, Egypt, Vietnam, Sri Lanka. When we talk about Sri Lanka is worse than the India, but in terms of per capita, Sri Lanka is ahead of India. This is the data. I'm not talking about anything about political rhetoric. It is just facts. So these are the challenges of the Indian government. So we will not be in the rhetoric of political uh, on social media. Okay. So how this information is going to help you geopolitically information. So if you are, for that you have to identify uh, who you are. That means whether you are investor, whether you are trader, or whether you are speculator, sattebaz. So speculators are the intraday traders or short term, maybe within 1 week they close the position. Investors are the people who invest for more than 7 years. Traders are usually few months to a few year, 1 or 3 years. Usually it is three. We say 3 months to 1 year. So if you are an investor, this is an opportunity to buy significant amount of investment. When we say buy on dips, dip का आता है, dip तो आ गए ना. When market is down 10-15%, that is dip. If you are a trader, then you will have to start following the Trump news, Trump indicator. Nowadays people are talking about all Trump indicator. Just follow the Trump tweets and that's it. But that is not easily possible. So what you do is the chart analysis and do the swing trading. Today's session is not about technical analysis, but that is what we are there. Okay. Uh, so any questions I'd like to ask? I'd like to. Today's topic is very much general, so I don't think. What about China? Uh, China, as such, does not e- enter into the political rhetoric. They do just business. Okay, so China is, as of now, is a very smart country. Since last 40 or 1970, for 46 years, last 46 years, China has not done any war. Last war they fought in 1979. Thereafter, they understood war is not right thing. Okay. Uh, all right. How does price affect oil price affect equity market? Okay. So the all economic phenomena are complex. Okay. There is no single direct one-to-one relationship. So everything is a complex. But if you try to uh, use common sense, use the logic. If oil price goes up, what happens in India? Petrol price goes up. Okay, transport cost goes up. Goods and services price goes up. Uh, labor start rising, start asking raise in salary. So the inflation increases. And once inflation start, then the profitability of company reduces because their expenses are because eventually profit is what? Revenue minus expenses and profit. So profit is reduced because of rise in expenses. What they do, they reduce the labor force, and labor force, they are the consumers. If people lose the job, they reduce buying and eventually the revenue goes down. So this is a vicious cycle. Inflation rise, company reduce the labor force, automatically customer people do not have the money, so automatically revenue goes down, and it is called then production is reduced when revenue is goods and quantity of goods and sales. Let's put a quantity, and when quantity is reduced, automatically GDP goes down. So this happens in a cycle. It is also called as stagflation. So many times a stagflation, that is stagnant growth and inflation, happens because of increase in the oil prices, energy. So oil is a gold. And once stagflation increases, then problem, if inflation is there and if any RBI or central bank increase the interest rate to reduce the inflation, then again cost of borrowing increases. So the interest cost of companies increases. So company uh, reduce the cost, they will again lay off some labor anyway don't have income, they will reduce the goods buying because of increased EMI. So this again is a vicious cycle. Be aware this phenomena, market and finance are complex. So don't expect the linear phenomena. It's like medicine only. If you ask why cancer happen, there are many reasons. Okay, so multiple reasons. Now there are people who drink alcohol in a liter, still they never get the cirrhosis or hepatocellular SCC. The people had never touched the alcohol, they get the cirrhosis. Similarly, cancer, the person who never had this smoking, they get the lung cancer. The person who smoke like chimney, he doesn't get a cancer. So this is similar to the stock market. So there is no direct relationship. That's why it is very difficult to predict a market. Not only that, people know this relationship and people react. So this is called as type 2 prediction. Uh, Again, I want to tell about politics and how politics, actually I posted one message where I posted, I don't remember. Politics and market. If many people start uh, predicting that there will be a revolution next year and Modi ji will resign, if this is the prediction, it will never happen. Why? Because then government will take a preemptive measures to avoid that. Similarly, in a market, if people predict that there is going to crash, it never happens. So market crash and political revolution happens suddenly. Because if government or stock market knows that something is going to happen, it is a complex self-correcting mechanism. So if someone is saying that next year Modi ji will be out of power, it won't happen. If if such thing happens, it has to be spontaneous, automatic. Similarly, market crash will never happen in this scenario. because at least because of Iran USA war. Other things may be World War III, or that's a different thing. Or in India, something drastically suddenly happens and something happens. That's a different story. But if this is called as level 2 prediction. Level 1 prediction is like weather report. You cannot change the outcome of the event by prediction. In level 1 prediction, for example, with weather. Okay, if Met department tells us that there will be tomorrow rain, you cannot have any impact on the rain. But if so, you develop some software and tell that tomorrow the market, that let's say Warren Buffett says that tomorrow market will go up. So what will happen? People buy today only, and it will go up today only instead of tomorrow. So that is because uh, the participant themselves are involved in the process of outcome. So outcome and participant are the same. Okay, it will go to the physiology of philosophy. Let's go. Let's ignore that. Where all we get the economic news, money control. You get the economic news. You get the trading. Trading economics. You go there. Next is what about gold in news? Okay. Now the gold is reactive. Gold is not. Uh, Gold does not decide the prices of stock market. It is a reactive. That means if there is uncertainty, people may buy gold, and they people don't believe in the dollar. They might buy the gold, but gold prices do not impact the stock market. As of now, gold in a scenario of say this, let's say all. This is the gold price chart since last, I think, 100 years. Okay. There was a huge rally in the 2005, 6, 7, up to 10. Thereafter, almost 15 years, gold remained sideways. And then there was the rally in the last 6 months, January. That time, people enjoyed. Those who bought in the January, they are stuck. They will have to wait maybe 5, 6, 7, 8 years to get that value. Because now, I always say this is a previous rise is the cause of fall. The gold will not rise immediately. It will take significant of time. But it will rise again. Gold, but it takes time. And since last, we can say that last 2, 3 months now, it is, we can say, stabilized. All right. Each country loan affect the market prices, and how should we hold long-term view? For countries loan affect market prices. The probably question is about debt to countries' debt. Now, these are very interesting phenomena. Uh, China, uh, which country has the highest debt as compared to GDP? Can you write in the chat box which country has the highest debt? Uh, okay, Japan. Japan, not USA. Ratio is we talk about a ratio. Uh, Loan to GDP. We can search on the Google. Uh, Japan has highest loan, government loan to GDP. Thereafter, USA. Okay, India has around 80%. India, Pakistan, these are 80%. Interesting part is that people say the loan. If you see the balance sheet, on this side there are loan, and opposite side there are the assets. So this was an interesting discussion in our MA economics class I was doing that time. So the professor was teaching about loan. So numerator is loan, denominator is GDP. What if country or person has assets? Then what is the point? It means if country has financial, let's say this is the Japan 300 uh, units loan and 300 units of asset, financial asset somewhere invested. So the net debt is minimal. What is the point of taking this loan to GDP ratio? As such, no. So net debt is more important. So to find out net debt. So this loan to GDP ratio is misleading. It does not give a clear picture of net debt. That is number one. Second, if country can print the notes, it can sustain high level debts for longer period. For example, USA, it can print dollar as much as they possible. What is the limitation to print the notes? Is the inflation. Inflation is the number one reason they cannot print unlimited. If inflation is low, they can print unlimited loan, unlimited of notes. So uh, any matter of rate does not matter when inflation is low. Secondly, government has to pay uh, interest and borrow again. Okay, so they just roll over. So what because they print notes, give interest, and again buy. So this is a very complicated theory. I'll take some other day. It is called as modern monetary theory, and very few people understand that the current monetary system since 1971, it is completely different. If I go to in a detail, you will get depressed because conclusion is money is illusion. Money सब माया है, ये सब कुछ भी नहीं है. Then you will get depressed. अरे हम क्यों काम कर रहे हैं? Money is an illusion. Actually, it is an illusion. Money is not real when you go into detail. But let's not go in that detail. So when USA, you may find a lot of YouTubers saying that USA dollar is USA has lot of loan, lot of loan, and it will crash. No, if there is a demand for dollar, USA will not go into trouble, and they will do continuous war throughout the world so that people will there will be demand for the dollar only. So what is the prediction for the TCS, Infi, IT? I don't think we should predict anything. Don't go into prediction. Focus on what is being done. Each sector has cycle. It is not the first time IT sector is down. It is not the first time IT sector is down. If you check the history, this is IT sector. Go in the past. See this. IT has declined 70%. Here 80%. Okay. Sometime past help us to reduce our present uh, pain. You can see this IT 26%. This is just in last decade only. When Modi ji arrived, that time also IT correction was there. Then COVID was the different story, and now it is IT sector is 43, and it has happened in the Putin era as well. So this is not something unusual. It happens many times. You want to see the Facebook? फेसबुक चला गया ना, मेटा, उसको मेटा बोलते हैं. Okay, those who are obsessed with the technology stock, this is the correction of Facebook. 76% correction in Facebook, which happened in last just 3-4 years ago. So जो भी है एप्पल को देखते हैं, डार्लिंग स्टॉक. Okay, this is Apple. Apple, how much correction? Almost 80%. In fact, more than 80. If I take this, 83% correction in Apple. And this is not the once. You can see again, second time as well, multiple times as well. Here it might be again 30-40%. Okay, so it has happened. Even TCS, what is about TCS? TCS का क्या future है? What is happening as of now is 55%. So it is what is happening in 2007. Seven. Oh my God. 67%. So this is not something new. 55%. So this correction is not new. The people who are new, they may feel that this is something, So I said those people are scared of correction. They should invest into the simple ETF, exchange traded funds. Okay? So let's stop here. Thank you very much. Those who have made notes, please post into the basic group. Thank you.
Thank you, sir, for the wonderful session, and thank you all the participants for attending. Thank you.